Listen, we're going to continue what we started this weekend. I wish more people were here tonight, but it is what it is. Maybe we have them watching online. And if you're watching online, we want you to do us a favor. We want you to share this post right now to so many different people because it's information they need to hear. So even though they may not be in the building, they still need it. So if you don't mind sharing it, tagging friends to let them know that we'll be sharing life-changing information tonight. It will be a great help. I heard Sunday was a buzz. People were talking about it, and I'm glad about it because we can preach and shout you and dance and throw high fives and all of that, and you leave and your life not still be together. So we just want to take the next 2 weeks, well, starting this past weekend and then this weekend coming up, to talk about some things that are extremely practical, extremely relevant to all of us. And so we're going to continue in that vein today. And so we have two guests. We have Mr. Maurice Phillips, who's going to be joining us. And we want to let's give God praise give a hand for Maurice. And then we also have Mrs. Jessica Hogan, who's going to be with us as well. Let's give her a hand as she comes. Now, tonight we're talking about something that a lot of people don't understand. So we hope that tonight you leave with understanding on this particular topic, and we're talking about life insurance. Okay, some people left on Sunday, said that's not what a church service is supposed to be, but I promise you, when you live life, you're going to wish you had, because it's all in the Bible. So we're going to talk about life insurance tonight. So we have Maurice. Maurice is a graduate of University of South Carolina. Has been a member here for how long, Maurice? 5 years. And now he's an agent for, make sure I get this right, Farm Bureau. And so he's representing Farm Bureau. And then we have Ms. Jessica Hogan, who works for State Farm, that she's been doing this almost 25 years. And so we both have they both have great experience, and I don't want to spend a lot of time with the introductions, but we have a table. Both of them have a table set up, so afterwards, if you want to talk further about life insurance and getting the policy for you or a family member, we want to make sure that you do that. So we're going to jump right into this. Y'all ready? All right, so let's talk about this. Before we even get to the questions, let's deal with the biblical aspect of this. In 2 Kings chapter 4, what happens, the Bible speaks about a man who served Elisha. He was a prophet, and he died. When he died, he left his wife and his 2 sons in debt, to the point that they had nothing, that the creditors were coming to get their sons to pay off the debt their father created. He had no life insurance policy. He didn't have enough money to be buried. They had to figure out how they were going to handle all the expenses, how they were going to live after he was gone. And we don't think about these things until it happens. And we have to be proactive instead of reactive. We were talking yesterday, and she said, Pastor, if you would have got a life insurance policy on yourself at 25, you could have got $1 million policy on you, and the only thing you would have paid was probably $50 a month. I said, well, let's do this today. She said it would cost you $300. So the policy changes based on age and health and all those different things, but it's in the Bible. We also see in Ephesians chapter 1 where the Bible says that when Jesus died, that the Holy Spirit guarantees us into our inheritance. So when Jesus died, he left something behind. So you see this all through Scripture. So we're going to talk about this. So Jessica, if you don't mind just starting this off, why is it important to have life insurance? Let's turn your microphone on. Let's get you open. There you go.
So let me first thank Pastor Sim and Lady Nikki for having me here today, because I feel like it's an honor and a privilege to be here to speak before the congregation. So life insurance is one of those things a lot of people tend to not talk about, tend to really not want to talk about. A lot of times in our culture, for example, it can be almost like taboo, where we don't think it's going to happen to us. Well, the reality is tomorrow's not promised to any of us, right? So we do have to plan for that. Think about it this way. You have car insurance, Okay, we all have vehicles. We all live somewhere, so we either have homeowners or renters insurance. A lot of us in here have cell phones, right? And we have insurance on all of those things. So why don't we have life insurance? Okay, so life insurance is one of those things where it's not comfortable to talk about. We don't want to necessarily talk about it, but at the end of the day, if we don't, how many of us know family members or friends or loved ones who have passed away by show of hands and they had no life insurance? Yeah, so then I tell you, if I see one more GoFundMe account for a funeral, I'm just gonna scream. But that's what families have had to resort to because we didn't properly plan.
Now, are you seeing more policies? Well, we know that as you get older,
Yes.
no, we expect that. We know that's coming. But are you seeing a change in policies because we're seeing a lot of younger people pass earlier now? So what would be your response to that?
So I'll tell you, just this week, I dealt with a death of a young gentleman. He was 25 years old, and he was shot, right in front of his house. So the reality of it is that we need to have this kind of conversation. The younger folks don't want to have the conversation because they don't think it's going to happen to them, right? But now is the time. If you're in that age group of like 18 to 25, you can get it for almost nothing. And we're going to talk about the different types of insurance. There's permanent insurance, there's term insurance. So we're going to get into that here in just a second. But what it boils down to is, what does your budget allow for every month to be able to accommodate that? Because quite naturally, if you think about what you're spending on, Chick-fil-A every month or Zaxby's or wherever you like to go eat, you can probably afford to spend a couple dollars on life insurance.
Well, let's go into that. So, Maurice, can you explain the difference between the two types of insurance?
Sure. So, again, first, I want to take a moment to thank you for the opportunity to speak in front of everyone. Quick aside is that I'm blessed to kind of sit over here with the band every weekend and play and worship with you all. But the lights feel brighter here.
Yeah. They do.
So, a little bit nervous.
Yeah. They do.
They're brighter.
Yeah, they are.
They did something yesterday because it's brighter than it normally is. So, yeah, you're good.
Okay, so the different types of insurance was the question, correct?
Right.
Okay, so we have term insurance and we have whole insurance or permanent insurance. I like to describe it thinking about the difference between, so I think of term as renting, and I think of whole life or permanent insurance as a mortgage. So if you think about renting a home or term insurance is for a set period of time. Usually you're not at that one spot all your life. It's usually there for maybe 1 year, 2 years, 3 years as far as renting. So in terms of a term policy, it's usually 10-year, 20-year, 30-year policy for a set period of time. Even if it's a policy through your job, which I know we will get into, that policy through your job is a group term policy that's only accessible while you're employed there. On the flip side, whole life is permanent insurance like a mortgage. So also a great point to mention is term insurance is less expensive than whole. Then the total cost of renting is less expensive than owning a home. So on the flip side, with whole life insurance is similar to a mortgage in that it's a little bit more expensive, but it's more expensive. It builds, as a mortgage builds equity, a whole life policy builds cash value. And the policy is permanent in that, just like a mortgage, as long as you pay your mortgage bill, as long as you pay the whole life insurance premium up until the point in which that policy is paid off and the mortgage is completely paid off, you own the policy permanently. So that pretty much explains the difference. And along those lines, I will say that both play a vital role. They both have their place. It's just a matter of making sure you're working with somebody who has your best interest at heart.
Yeah.
And can make sure that, one, your need is met, and then two, your need is affordable. One thing to mention along the lines of term insurance is that most times upon doing a need analysis or need calculation, which we'll get into, you'll be surprised what your actual need is. It can be a couple of $100,000, it could be $1 million, it could be more than that, based upon life, family, debt, what have you. And you may not be able to afford to get whole life on its own to support that need. And so you can have a mixture of both to cover that need. But with term policies, most companies have it where your term policies are convertible, which simply means that as your income increase / debt decrease, you can take the term life you have in place already and convert that to whole life as you can afford to pay for more. Very last point with that is a person might say, well, why not just wait until I can afford this whole life policy at a higher amount? As she said, you don't know what can happen tomorrow. Yeah. You might be, so life insurance takes into account your age and your health. The younger you are, the healthier you are, the more cost effective the life insurance policy is. So you can be healthy today, tomorrow anything can happen. That's right. So it's not, I mean, our lives are our most important asset. So with that being said, you have to make sure you invest in your life, value your life enough to invest in life insurance immediately so that you can secure your insurability for next year and the years to come so your family's financial security is intact.
So, because a lot of people were confused, even myself earlier, about term and whole, because we hear it, but we really don't know it. So pretty much term is, oh, I get it for 5 years, and after the 5 years is over, and the money that I've put into it is gone.
It depends on the type of term policy that you have. So there's various term policies out there. I won't take a deep dive into a lot of them, but for example, there's a return of premium term policy where at the end of the term, you get all of your money back. Now, it's a little more expensive than a traditional term policy, but some people like the idea of, okay, when my term ends, I get a check from the company. Okay, so there's that kind of term policy. Also, there are decreasing term policies, and what happens a lot of times, I see this with my older generation, they get locked into a decreasing term policy. They don't realize it's a decreasing term. They're 80 years old, they pass away, and the policy is no longer there, or maybe there's very little in it, maybe $1,000, $2,000, but that's only because they weren't well educated. So whatever you decide to do, whoever you decide to go talk to, make sure you're taking notes and you ask the right questions, because you really want something that's going to be with you for your whole life. I mean, that's really what life insurance is designed for. But as Maurice stated, term insurance is a lot less expensive, and sometimes if that fits your budget, do what fits your budget, right? But at the end of the day, know that you can convert that term policy into something else, and depending on the type of term policy that you have, there could be some funds available for that conversion.
Okay, so we're going to do something quick. We're going to do a quick activity to see roughly how much you think a policy should cost. So how many of you right now, just raising your hand, if you were to get a policy, how much you think, like $50,000 is a policy you would need? Raise your hand. 100,000? 100,000? Raise them up high so I can see. 200,000? 300,000? All right, 4? 5? All right, half of y'all big money, $500,000 folk. Okay, so every insurance competitor actually has something called a life insurance calculator that you can actually put information in, and they will tell you roughly how much you need to be insured for. All right, so Jessica's going to go through this. We have some things on the screen that we have placed up there for you to see. So she's going to walk through this with us so you can see roughly how this works. Okay. Screen 1. There you go.
Okay, so here's the calculator. So we're going to click Get Started. Okay, so this is an individual who has a net annual income of $42,000, and 7 years, they want the death benefit to provide income for their family. Okay, so $42,000 for 7 years. How much debt do you have? So there's $15,000 in debt. So when you think about debt, you want to think about your car loans, your credit cards, maybe some student loan debt, anything that you're making monthly payments on. Okay, so that's the piece you want to think about there. Okay, and then next we have the final expenses. That's your funeral, right? So depending on, how you want to go out, so to speak, do you want to be cremated? Do you want to, do you want to do like Miss Aretha, do you want that kind of funeral? So think about what that looks like for you, because some people, they're like, okay, well, just cremate me or put me in a pine box. I hear that all the time, right? So think about what that number looks like for you. I will tell you, though, the average funeral, so this is not a cremation, average cremation is about $6,000. I had a client pass away just this week, and his wife brought me the information from the funeral home. So $6,000 for a cremation. And a funeral with the casket, all of that, $10,000 to $15,000. So it's expensive. It really is. All right, let's go to the next one. All right, so this would be the mortgage balance. So how much do we still owe on our homes? Or if we are not a homeowner and we rent, what does our rent look like for, let's say, a year? Calculate what that looks like for a year, and how many years would you want your family to still be able to pay that rent? Okay, next. What do our assets look like? So what do we have in the bank in terms of liquid assets, something we can get to quickly? So a savings account, maybe some CDs, checking accounts, that sort of thing. And then how much additional life insurance do I have right now? So what do I have at work? Maybe my parents took out a smaller policy or something when I was younger. So find out what that looks like, and you want to add that number in there. Okay? Next. So this individual is at $609,000 is what they need. Yeah.
Somebody said Jesus.
Yeah. That's a lot, but it adds up quick, doesn't it, when you start plugging those numbers in?
How many of you are surprised to see 600,000 on the screen? Mm-hmm. Yeah, and this is not including, because the number for the funeral was $5,000, which is less than the cremation.
Yeah.
It was $15,000 in debt, not including student loan debt.
That's right.
It was $42,000 for salary. So you have all of these different variables, and that policy alone, just putting those numbers at $600,000. So if something were to happen, so if you have a $200,000 policy, where's the other $400,000 you need?
Right.
This is a shocker, and this is why we're having a conversation, because we can leave something behind for our families to leave them in a better position. But instead of having $400,000 for them to live off, they're trying to figure out how we're going to handle paying off the $400,000 of debt you left. Right. That's a major question we have to ask. So you guys talked about term and whole life insurance, but let's get a little. People tell you I can't afford it.
I get that all the time, and I quite frankly say, can you really afford not to have it? I mean, can you really? I mean, the example we just looked at was over $600,000. I mean, can you really afford not to have it? So let that sink in for a second. I ask my clients when they're sitting in front of me and we're maybe writing auto insurance or doing something a little different, I'll get into the life insurance conversation, and I'll say, if you died yesterday, what does that look like for your family? And that makes them think, like, what does that really look like for my family? Are they gonna be able to stay in the house? Are they gonna have the option to stay in the house? Are they gonna be able to pay the mortgage? Are they gonna be able to keep the car that still has a loan on it? Okay, so those are the kinds of things that you have to think about and take into consideration. And then one of the things that wasn't in that calculation too, a lot of us I'm sure have children. So do we want them to be able to go off to college and not have to worry about a big student loan when they're finished with school? So that's another piece that we can factor into that calculator too, as college expenses for the kids too.
Maurice, got a question for you. So you have people who have different health issues and health conditions. Can you explain what happens if someone isn't healthy, how the policy works if someone is, challenged in their health?
Sure. So, again, life insurance takes into account two things: the age and your health. The healthier you are and the younger you are, the more cost-effective it is. However, there's a threshold, particularly on the health side, where if a person isn't healthy enough, then underwriting may say, hey, unfortunately, we have to decline you from the process of even being able to get life insurance. It's hard to have that conversation because, of course, as insurance agents, we want to try to provide life insurance for everybody. But, health is something that we cannot control. We cannot control it at all. So, when it comes to a person that has conditions, like I know with us particularly, if a person has like a major illness, like a current major illness particularly, more than likely we cannot provide life insurance for them at the time. If a person has, if you have diabetes, yes, more than likely you can get life insurance. If you have high blood pressure, yes, more than likely you can get life insurance. But on the health side, if certain combination, and this is not my expertise because the underwriting handles all of this stuff. Right. I just present all the information to them, let the underwriters pull medical records and do their background searches and come with their decision from there. But, that's why it's important to get it as soon as possible because we only can control today. And if you do not take the necessary step to do it as soon as possible, then you pretty much gambling with your insurability, which is something none of us should do because it's important for all of us.
Right.
So I remember.
I'm just going to add, Pastor Sam. Another thing too is tobacco versus non-tobacco. So if you're a smoker, you're going to pay a lot more for life insurance. Now, what most people don't know is if you start out with a policy as a smoker, if you quit and you are tobacco free for 12 months, then you can revisit with your agent and they can reassess things and you might be eligible for the non-smoking rate at that point.
Can I add one thing to that too? Along those same lines, in addition to smoking, even for if there's a height to weight ratio is something they look at. And if it's not in whatever standard they say, it may not eliminate you from getting it, but you may be, surcharged for because of that. But let's say if, I don't know, in a year or two you lose weight or you have a healthier lifestyle, you can go back through underwriting and then if approved, you can get a better health classification, which will lower your premium.
That's exactly right. A lot of life insurance, depending on the amount that you decide you want in terms of a death benefit, you have to go through medical underwriting. And a lot of times what that looks like is a nurse will come out or either you'll go to the exam 1 or somewhere like that. They'll put you on the scale and they'll take some blood, they'll take urine and your weight, your height and your weight. So all of that will have to be done before a policy is issued. But that depends on the amount that you decide to go with. And with us, it's over $50,000 requires an exam. So typically if you go with something less than that, you don't have to go through all of that medical underwriting.
Can you take a policy out on anybody?
You can. They just have to give you permission. So I could take a policy out on someone as long as they sign the application. Absolutely. I have a lot of children who take policies out for their older parents, okay? And I have a lot of grandparents who take policies out for their grandkids. So absolutely you can. They just have to sign the application.
Yes, and so usually, well, with us, anyway, it has to be some sort of insurable interest. So as you say, a parent, or a child to a parent, or a grandparent to a grandchild, there's some type of what's called insurable interest in that regard. So, and even like on the business sense with business partners and buy-sell agreements and key man policies and all that, along with the insurable interest in that sense is, the partnership of owning a company. I'm getting a little bit in the weeds now, but basically if there's some sort of insurable interest, regardless of if it's family or on the business side, then for how we operate, then yes, you can take a policy out on them.
Because the reason why I asked, because there was someone I heard of, they were married, and the marriage dissolved. But the wife had a policy on her ex-husband, and then the ex-husband passed, and she got a check because she kept paying monthly on the policy, so that can happen.
The key is who's paying.
Wait a minute.
That's the key. Who's making the monthly payments, right? Yeah. But yes. So obviously at some point he signed the application for her to be able to take that policy out. And it's important too, and most people don't think about this when they most people don't think about when they maybe divorce or a situation like that. You need to look at your beneficiaries and you need to get that kind of thing updated. If you have a policy through work, maybe 15 years ago that looked different. Maybe you were still at home and you listed mom and dad, but now you're married. So it's time to probably update that to your spouse.
So you have some people where their spouse may be like stay-home mom or stay-home dad because they're taking care of the kids and all that. Should you take out an insurance policy on them?
Yes, absolutely. Because if you think about it, with a stay-at-home husband or a wife or mom or dad, there's a cost associated with that.
That's
right.
It's
more than likely that's not. When if you think about, so for a stay-at-home dad, for instance, if he's taking care of kids, cooking, cleaning, what have you. If you were to think about how much it would cost to pay somebody to do that, I read an article one time that said that if you put a cost to child care, which I have two, so I know how expensive that is. If you look at child care, they say cooking, cleaning, running errands, all of that. The article said that it could be upwards of $70,000 a year, and as far as the cost associated with that.
That's right.
That's something that if, let's say, Lord forbid, that stay-at-home dad were to pass,
right?
If the mom and the wife is working, somebody got to make a move. Money has to come out of pocket somehow. So it's important to still have a policy in place, because if something were to happen, there needs to be a financial plan in place to alleviate that burden.
That's right.
See, this is why we have these conversations, because, it's just a different dynamic, a different perspective on looking at life, not thinking that, oh, my God, that's $70,000 a year. Where's $70,000 going to come? I'm only making, 42, as the screen said earlier. We wanted to do this tonight because it's a conversation we don't normally have, but let's make a turn here. So we talk about life insurance and we talk about, I guess, the end, but how can we look at a life insurance policy as a way of building wealth for the future?
Very good question. So permanent or whole life insurance is really going to be the vehicle that allows you to build wealth or leave a legacy for your family. As Maurice stated earlier, whole life or permanent insurance is more expensive, but at the end of the day, it's designed to last you for your whole life. He used the illustration of buying a home, okay? Homes typically appreciate. Well, life insurance kind of does the same thing if you're buying a permanent or whole life product. So what typically happens is, now this doesn't happen immediately because over time it builds cash value, okay? As that cash value builds over time from the premiums that you're paying, then that is what I like to call a living benefit for whoever the policy owner is. So if you have a hardship or if you need to pull some money out of that policy, that's what it's there for. Okay, you can pull it out. You don't necessarily have to pay it back because it's your money, but if you die, it does get subtracted from the death benefit. Okay, so let's say you have a $100,000 whole life policy, and in 10 years, there's $10,000 in that policy, and you decide, you know what, I want to take a trip, or I want to buy a house, or I want to buy a new car. You pull that $10,000 out and you die, then you just left your beneficiaries with $90,000. Okay? But a lot of clients like the idea of being able to have access to that if they need it. Now, not everybody cares about being able to build wealth in a life insurance policy. But I will tell you, life insurance is not necessarily an investment, but if you have someone run an illustration for you around some whole life insurance options, you will see where that is the best return of your money out there. It really is. And the other great thing too is when you pass away and you leave that money to your beneficiaries, it is not taxable. Uncle Sam can't touch that money. Unlike a 401k or a Roth IRA or those types of things, securities products, those types of things, you pass that on to your beneficiary, it's taxable to them. Life insurance is not.
In addition to that, so there are whole life policies out there that are called 20-pay, or people call it different things, basically meaning that your traditional life insurance policy, you pay it for the entirety of your life. And then whatever the policy amount is, that's what your beneficiaries receive. Yeah. There are what's called 20-pay policies where you pay it for only 20 years. And the really cool thing about that as far as the cash value is, I did a math, so if it's 20 year, you're paying for 20 years as a whole life policy, between 20 and 25 years, what you put into the policy will equal what the cash value is, which means that from then, you're just building cash value without paying premium anymore.
Right.
So as far as a wealth building investment option, you can, after 20 to 25 years, for the next 20, 30, 40 years, you're just building cash value without having to pay premiums.
Yeah.
So we have people who say, I'm good, I have insurance, my job covers me, but then they got a new job.
Gotcha. So that's probably what I hear the most.
Yeah.
I would say 90% of the people I reach out to regarding life insurance say, oh yeah, I got it through my job, I make a lot of money. Yeah. My life insurance policy is 2, 3, 4 times what my income is. I'm good. So let's say if a person makes 6 figures, make $100,000 to be clean with clean numbers. I mean, they can have a $300,000 policy. We know first of all that with the needs analysis, more than likely that's not enough. But on the flip side, it still more than likely is a group term policy, which only exists while you are an employee there.
Right.
Some people say, well, I'm gonna get a new job, and that new job is gonna have group term life insurance. It's cheap. I get a lot of policy amount for it. I'm good. So this is what I get people to think about, and this is something I had to learn myself. Is let's say you love your job. Let's change it. So let's say you love your job. You stay there for 20, 30, 40 years, right? Love it. Greatest job in the world. And then when you retire, what's the game plan? It doesn't matter if you quit your job tomorrow or stay there until you're 65. A group term policy is a group term policy.
Right.
So that means you're 65, let's say, and you have no life insurance. Trying to get life insurance, our company is set up where once you get a certain age, you can only get whole life insurance. You cannot even get term insurance anymore.
Right.
So being 65, let's say, trying to get whole life insurance, you literally can be paying hundreds of bucks a month trying to get a policy that may only be, 25, 30 grand or so, which is something, but that can be a different scenario had, if anybody takes the initiative to invest earlier.
Yeah. And that's if you're still healthy at 65.
Exactly. Yeah.
So prayerfully, you won't have any medical conditions that'll make you uninsurable, and you won't be too short for your weight, right? Okay. That's a nice way of putting it, right? But if you're in that situation, you might not even be able to get it, at 65.
And we can't get life insurance on our children, as you said earlier.
You can, absolutely. And I encourage parents to get life insurance for their children while they're young and while they're healthy. So that policy Maurice was speaking of, that 20-pay policy where you pay for 20 years and it's paid up, Well, you get that on a newborn, 20 years old, you're done. And it's still building cash value, the death benefit's still growing, and that's something you can hand off to them, right?
I see a vision. I see everybody going to their nieces and their nephews and their daughters and their sons. They're about to cash. But you, and you.
But the other great thing, too, about getting it on the children is they're healthy. A lot of times they're healthy. They've not developed any sort of medical condition. Sometimes I have a niece that, 18, 19 years old, she developed diabetes. So you just never know what can happen later on in life. So go ahead and get it on the kids while they're young and healthy, and it's not so expensive.
So along those same lines, I actually did a little bit of numbers just to put things into context. Okay. So I have numbers for healthy infant, 1 month old. If you do, so I'm doing $100,000 whole life coverage on a 20-year whole life policy. That makes sense?
Yeah.
Okay. So health and everything is standard. It's going to be about $61 a month for 20 years. That equals about $14,000 at the end of your payment period, right? And so it's $14,000 of your investment. At 30 years, the cash value is 19 grand. And it continues to build from there, which means that now the infant is 20 years old, have $100,000 whole life policy paid for.
Yeah.
Cash value is building. What's popular that a lot of people don't know, I can't say it's popular, but people don't know about it. But those who understand how this works, what they do is they get policies on babies and on kids and use that to supplement college, almost like a college savings plan. Or they can use it towards getting a car or a house, or getting a child married. It's money that you have that you've invested in, and now you're reaping the benefit from it that you can put towards things to further your child's life in some regard.
Wow.
And they have it for the rest of their life.
Absolutely.
That's the key.
Wow. Listen, we're running out of time, but I wanted to bring them here not just to talk about what happens after, because we need to think about that, but also as a way to make sure that we leave a legacy behind. Make sure that we're leaving something behind for our children, for our spouses, for our family, because what ends up happening, and I had this conversation with Rosalind Glenn, what happens is we live our lives, we come to a place, we make money, and when we come to the end of our lives, if we don't have anything there, the next generation has to start over. And as much as we keep saying we want our kids to have more than us, it's more like we're buying them things now so that, my sons, I buy them shoes the way I buy them shoes because I didn't get the shoes that I wanted when I was younger, right? Yeah. And so in my head, I'm giving them something I didn't have versus thinking about maybe I can leave something behind that they can live with.
That's right.
Of course, my wife is like, it's ride or rapture, which means we're not going to die. We're going to live until Jesus come back.
Right.
I don't know when Jesus is coming back, but based on her, we might be, I don't know. But but just in case a ride or rapture don't happen, we need to make sure we have this. And we wanted to have this conversation because we want you to think about it. What we want to do, we have tables set out in the hallway where the both of them will answer your questions and you can get more information from them about life insurance, because it's something we need to consider and something we need to look at. Does that make sense? Because once again, we want to talk about being wealthy. We want to have resources. We want to have money and all that. What would it be like to, I said the other week, I want to live a kind of life that I have something in the bank that my wife will cry if something happened, but she will smile quickly when she has to go to the bank.
Right.
So I miss them, but ching ching, so we kind of like want that to happen. I'm just saying, you know what? Let's say we had this conversation yesterday. I'm sorry, we got to say this one more thing. Mm-hmm. You said something interesting yesterday. Yeah. You say women will get life insurance quicker than men.
They will. Absolutely.
Why? Can you please tell them what you told me?
Oh, Pastor Sim.
Tell them. You want me to tell them?
Yeah, you tell them.
Okay, I'll tell them. So the guys are like, I can't give a policy for my wife like that. I can't leave her that much money because I don't want to die and she spend that money on another man.
Yeah. 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 I know. It's sad, isn't it? It's so sad. And I'll tell them, you get the right policy, they won't have to get another man, right?
She can date. Yeah. Let the church say amen. All right, so let's thank Jessica and Maurice for taking out their time tonight to answer our questions and inform us about life insurance.